Hey everyone! Welcome back to Dollar Vest, where we break down money, markets, and mindset in simple English. Today's video is inspired by the world's most legendary investor, Warren Buffett. His message is clear: do not buy stocks right now. But wait, isn't Warren always about long-term investing? So why is he sounding this warning now? Let's break it down step by step. Part 1. Who is Warren Buffett? Warren Buffett is the CEO of Berkshire Hathaway. He's one of the richest men in the world, but he built his wealth by investing in the stock market. He's known for buying great companies at good prices and holding them forever. He's also known for keeping a calm head during market panic. So when this guy says stop buying stocks, the world listens. Part 2. What did Warren Buffett actually say? Recently, Buffett warned that many stocks are overpriced right now. He says investors are being too emotional, buying because they fear missing out, not because the company is actually worth it. He also mentioned that interest rates, inflation, and debt are making it harder to find safe investments. Buffett said, "We're finding fewer and fewer good deals." That means he's holding on to more cash and being very picky. Part 3. What does this mean for you? Let's say you're a beginner investor or just someone looking to build wealth. Should you sell everything? No, not necessarily. Buffett isn't saying to panic. He's saying, be smart, be patient. In times like these, emotions can ruin your investments. So here's what you should consider doing instead. Step 1. Avoid hype stocks. If a stock has gone up too fast, it's likely overpriced. Step 2. Do deep research. Buy companies you understand, not just what's trending. Step 3. Build a cash cushion. Buffett is holding over $150 billion in cash. That gives him power to buy when prices drop. Step 4. Think long term. Even Buffett makes fewer moves during unstable times. Patience is a strategy. Part 4. Warren's biggest current moves. So what is Buffett doing with his money right now? He's still holding Apple, a stock he believes in long term. He's also investing in treasury bills, short-term government bonds that pay interest. That's his way of protecting cash. He's avoiding risky tech startups, crypto, and overvalued meme stocks. Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." This is one of those times. Part 5. What should a smart investor do now? If the market drops, it could be a chance to buy strong companies at lower prices, like a sale. But until then, here's a simple rule. If you wouldn't buy a stock at today's price, don't buy it just because others are. Don't chase returns. Focus on your goals, timeline, and risk comfort. Remember, even doing nothing is a strategy. If this video gave you a clearer understanding of Buffett's warning, hit that like button so more people see it. And if you want more no-nonsense financial wisdom, subscribe to Dollar Vest. New videos every week. Comment below, are you buying stocks right now or sitting on the sidelines like Buffett? Thanks for watching, and remember, the best investors don't rush, they prepare.